Hello, crypto fans, and we have some news for you. First of all, the spot ETF for Ethereum might be delayed, and we'll talk about this right now and what might that do to the price action, because it actually might delay a more bullish period, especially for ERC20 coins. So it's not that the SEC is not going to approve them, they're still going to approve all the S1s. But they requested that the S1 forms and requested resubmissions by July 8th, and that could potentially delay the launch of spot Ether ETFs until mid to late July. So not early July, but mid to late July. Now, it says possible, but if they're basically requesting resubmissions by July 8th, unless they submit them early and there's not that much time to submit them before the holidays, they could actually just delay them until after July the 4th. So Eric Balchunas could be wrong. So SEC comments delay process. The SEC commented on the S1 forms and requested resubmissions by July 8th. According to Balchunas, this new timeline means the launch of the spot Ethereum ETF could be postponed until mid to late July. It's not 100% certain, but it looks somewhat likely. ETF Store President Nate Gerasi noted that the last round of S1 revisions was relatively minor, predicting the SEC would clear issuers for trading within 14 to 21 days. Although the exact timeline remains uncertain, the SEC has indicated a potential launch this summer. Gensler said this summer, but this summer could definitely mean September. Unfortunately, think we're going to have to push back our over-under till after holiday. Sounds like the SEC took extra time to get back to people this week, although again, very light tweaks. And from what I hear, the next week is dead because of holiday. July 8th, the process resumes. So it definitely could be another 2 or 3 weeks before we get the ETF. So if with the ETF launches mid-July, I would say like there could be a dip until like the end of July. And then in August, the ERC20 stuff could start coming up because of the ETF. So definitely not confirmed on July 2nd. Approval of the S1 forms is the second part of the two-step process required for the ETFs to go live. The first part involved the approval of issuers' 19B4 forms in May. The SEC approved 19B4 filings. So the 19B4 was the big thing, but the S1 also cements that Ethereum is not a security because for it to be S1, the underlying asset cannot actually be a security. The S1 forms are not bound to a specific deadline, leaving issuers reliant on the SEC's timeline for review and approval. I still think the SEC is requiring small, minute changes just to draw this out, maybe under instructions from Gensler, although it is not really Gensler that's making these decisions, but he probably definitely has some influence over them. So this might actually push back the ERC pump deadline. And I do definitely think there's an ERC pump. So instead of like, $5,000 by the end of July, you might get like $5,000 by end of August, mid-September. And that is getting us closer to that fall bull run. The other thing is Bitcoin activity has dropped to its lowest level since 2010 and its lack of retail participation. The ratio of active Bitcoin addresses has plummeted to its lowest level since November 2010. That is like essentially a year after Bitcoin started. According to on-chain data from the block, in June, the weekly active wallet ratio dropped from 1.22 while peaking at 1.32. And that's why, the streams and the videos have not been getting that many views because there is very, very little Bitcoin activity. Additionally, the total number of active wallets has reached multi-year lows. Active wallets, the week of May 17th, recorded 614,770 active wallets. Now, this comes at a really bad time because the less active wallets there are, the less volume there is. And the less volume there is, the more it's prone to massive fluctuations by one big seller, i.e. MT Gox. Was this all coordinated? I don't know. I don't think so. I just think the sideways action has people bored, so people aren't really moving Bitcoin. And any amount of small sales, like the ETF activity, could definitely bring it down. And that's why the ETF sales, us being negative, has an overall outstretched effect. If they start being bullish again, that will also have an oversized outstretch effect. So that's why you're seeing that's why you're seeing more volatility, because there's not as much volume, and small movements could mean large volatility. So this year's run to new all-time highs, meaning 73K, was driven by institutional capital instead of retail investors. The wider economic solution could have played a role in retail not making as many crypto investments as they've done in the past. I will remind people that the last bull run with retail basically was because of the stimuluses. We're not getting stimuluses this time, and the interest rate is still high. So that's what he's actually talking about. But it may not make all that much sense to people because the stock market is still high. So people still have money to buy tech stocks, but they're just not buying crypto. Maybe the attraction to AI has overridden the attraction to crypto. The drop in activity rate comes as investors brace for a period of rising whale movements, including the Mt. Gox trustee planning to sell distributing payments to creditors in July. And that definitely could have a bigger effect because you don't really have as many active wallets. I don't think they'll all sell at that time, but some of them will. I'm not exactly sure how much. They've been able to sell their rights to their coins for quite a while now, but there are really big gains for them to sell. Due to this concentration, much of the bearish trading activity is being performed off-chain, which doesn't significantly impact on-chain duress activity statistics. Some larger holders, including those linked to governments, were also spotted partaking in selling activities. So these selling activities, because the overall activity is not there, the volume is low, these sales are having an outstretched effect more than they usually would have. So we could see like more bearish movements because of this until the activity picks up. Or they could do OTC transfers where they sell directly to BlackRock, Fidelity, all that stuff. So it's a hard to guess, but the bullish anticipation might have to be held off because of the low activity, and also because the spot Ethereum ETFs are actually delayed by the SEC, because I think they're just trying to drag this out. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.